So think about it this way. Your policy, if you think of it like a rocket ship, you have the base of this rocket. The base is called your base premium, okay? The base of the rocket is your base premium. Then you got the 2 booster rockets that are attached onto the side, okay? Those are your paid up edition riders. The majority of your premium is going towards those paid up edition riders, anywhere from 60 to 90%. It's because that's what gets the rocket ship out of the sky and out of the atmosphere. That's the purpose of the booster rockets, is to supercharge it out into space. And so the same thing is happening inside of your policy. Why and how we have cash value made available to us immediately in the policy, my definition of immediately is within 30 days, is because of those paid up edition riders and that paid up edition premium that we are paying inside of this policy. Hey Money Multipliers, welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kesler, and we ask ourselves, do our dollars make sense? Welcome back. I'm here every Tuesday with another episode, and we've been doing some pretty cool topics. Today, maybe a short and sweet topic, all right? It might not go as long as what we normally do, but I'm very excited about this. And you may see me, if you're watching me on YouTube, you may see me look over, because I'm going to be pulling some topics from a presentation that I built not too long ago called The Mindset and Mechanics Behind Becoming Your Own Banker. This was a presentation that I gave at our most recent Money Multiplier Mastermind event in Denver, Colorado. And then Noggle loved it so much, he says, hey, I'm doing my 3-day virtual event. Can you please come and do that same topic on the 3-day virtual? And I said, sure, man, no problem. So today's topic, we're going to be getting into how does the infinite banking concept and our whole life policies build cash value. And I'm going to get deeper into specifically how it happens, why it happens, and what allows us to have cash value available immediately from our policies. Now, reminder, I also have another show that I do every week, Thursday morning, 9 a.m. Eastern Time. I go live on YouTube, Instagram, Facebook, LinkedIn, and I think that's all the platforms. So you can come and join me live, all right? Be in the chat box. You can ask me questions live. But if you are not live, you can watch the replays on the Money Multiplier channel or the Hannah Kesler YouTube channel. And you can also even see it as a podcast episode. So if you go and look for Money Mornings with Hannah Kesler, you can also check out the podcast of that show as well. I'm going to kind of start turning it into like a live AMA, Ask Me Anything type of style here soon, but I've just had a lot of thoughts, and it's kind of a fun show because I can just do it right on the topic that I want to, like thinking about it the day before. And it's not everything infinite banking. We get into other philosophies and psychologies, and it's a fun show. I'm really enjoying it. But I will say, being on the road, it has been a struggle getting up at 7 a.m. to do the show, because I'm an early bird. Like morning times is my favorite part of the day, but waking up early is kind of hard for me. Like sometimes I'll set a goal for myself. I'm like, okay, set the alarm for 5 a.m. We're going to get up and we're going to be on the road by 6. No. My alarms are going off and I get up at like 6:30. But this is going to be a fun little episode. So again, how does cash value build in our infinite banking systems? Let's kind of get to the basics, okay? And I'm going to read a brief snippet from Becoming Your Own Banker by R. Nelson Nash. If you don't have that book, I highly recommend go to Amazon, go purchase the book, or send me an email, podcast@themoneymultiplier.com. I have copies at home that I can always ship out and send to you as well. What do I charge? I think I charge $30 for it, and that includes the shipping price. Just remind me, my dad sets all the prices, okay? But I do have some books at home I can always sell and ship to y'all as well, or just go to Amazon and go get the book that way. But on page 3 in Nelson's book, he states, the infinite banking concept is a major paradigm shift for most folks. It will require several thorough readings to fully understand its message. The concept is not complicated, it is just different from the way the majority thinks and behaves. In fact, it is the ultimate in simplicity. And hear me out, okay? I get it. Being second generation to this concept, it's very easy for me to grasp this because I always make the joke, I didn't have to go in and unlearn all the BS that y'all may have learned growing up throughout your life. You know, you might not be a Gen Z person like myself. And I'm telling you, for my Gen Z people, it's so much fun starting this stuff when we are our age, because I can't tell you how many people tell me, Hannah, I wish I would have started this when I was your age, or Hannah, I wish I would have known about this and started this stuff 20 years ago. I hear that all the time. If I had $1 for every time I heard that, I wouldn't be sitting here talking to you right now. My butt would be in Mexico drinking a margarita on the beach right now, okay? Let me tell you. But, you know, it is, okay? I always follow the principle, the KISS principle. Keep it stupid simple. And as human nature, we just love to overcomplicate crap, and it doesn't have to be that complicated. The hardest part about this is how you think about your money, because how you think about your money is going to greatly impact how much money that you have. See, the problem is always going to be the problem, okay? And what I'm talking about, the problem is, well, the commercial banking system, the fractional reserve lending system that we have here in America. And matter of fact, there was actually, I have a screenshot here in this presentation that I did from the federalreserve.gov website. This, I want to say I got this sometime late 2020 is when I took this screenshot. And it's still on there to this day. I can send you a direct link. Just reach out to me. But on the federalreserve.gov website, it states the reserve requirements. As announced on March 15, 2020, the board reduced reserve requirement ratios to 0% effective March 26th of 2020. This action eliminated reserve requirements for all depository institutions. So literally, by law, and it's still up on the website to this day, March of 2026, it's still up there to this day, this exact verbiage on the federalreserve.gov website, the bank's requirement to keep cash on hand legally is 0%. So when you go place your deposits at the bank, you think that your money's safe at the bank. It's going to be there when I come back and when I retrieve it and I need my money. But legally, they don't have to have your money held on their reserves. That's the problem that we have. The problem is that these banks are playing the game of, well, I hope and I think that not everybody's going to come and do a run on the bank and request all of their money out at one given point in time. Okay, I mean, that is what fractional reserve lending is. For every $1 that you, the depositor, leave there at the bank, that bank can now lend out $8, $9, $10 for every $1 that it has held on its reserves. But now it actually can have $0 held on its reserves. And I think Thomas Jefferson said it best. This was said over the debate over the recharter of the bank bill in 1809. Thomas Jefferson says, if the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks will deprive the people of all its property until their children wake up homeless on the continent their fathers conquered. The issuing power should be taken from the banks and restored to the people to whom it properly belongs to. See, that's why I really follow the Austrian school of thought and a lot of these Austrian why am I struggling? Economists. Thank you. That's the word. Austrian economists that are out there, like a Ray Dalio. I love people who think like that because they think that we, the people, need to hold our currency and it needs to go back to the free market. The government has too much control and intervention of what's going on over here. And that's why, we're seeing all of this inflation going on. That's why the dollar's not tied to gold, so that the Fed, which is number one, not federal, and number two, it's not even regulated, okay? And number three, it doesn't have any reserves on it. The Fed is really hurting us as an economy. And if you want another resource on that to go and nerd out deeper on it, go look up a book called The Creature of Jekyll Island by Edward Griffin. I was actually doing a book study about 2 years ago on this channel with a good friend named John Hurl. Hey John, if you're listening, hey buddy. But we were doing a book study on it together, and we were going chapter by chapter, line by line in that book, until we kind of got caught up and we didn't really finish our book series. I'm sorry, we should probably bring that back. But we need to take it back to the American people, because just by us just looking at the Constitution itself, okay, and I know I'm not saying this as eloquently as I could be, okay, that's just who I am, all right, vibe with me if you vibe with me, all right, if you don't, to go somewhere else, don't watch my channel. But, the people, the government works for us. We, the people, do not work for the government. It's literally in the Constitution. And for whatever reason, the government has came in and has taken over all this power over us. And honestly, as of recent, you see all the stuff, one thing that the right wing and the left wing can finally agree on, all the stuff about the Epstein files and yada, 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 right? That's a huge thing within the news nowadays. I don't even watch the news, honestly. I don't pay for cable. Here in the van, I do have a television, and I can do some streaming services, and so sometimes I'll stream my news channels I like to watch, okay? I don't want to get so political here. But, and I'll kind of see the headlines popping up and see what, folks are talking about out there in the world. And I'm so sick of it. It's just it's a popularity contest. It's just, oh, he said, she said. Everybody's fighting against each other, and I'm just so over it. Okay, let me tell you, actually, I was at that music festival earlier in February, and there was a monk walking around selling their books, asking for donations, right? I get it, preach the message and preach the word out there. But I firmly believe that we can have peace on this earth if everybody can just have more compassion, have more sympathy for one another. A big term in our generation is the empathy term, and I kind of have a love-hate relationship with the term empathy, and I'm not going to get into my thoughts of reasons why, but that's why I like to use the word sympathy. But, I think people can have opposing views, and it's okay, If I don't agree with what you're doing, that's okay, but you're going to stay over there. If you don't mess with me, I ain't going to mess with you, and we can live in harmony together with one another. Now, hopefully I'm not sounding so naive as a young girl, and y'all are going to start hating on me because I'm talking about all this stuff, but seriously, there's a lot of issues in our country, and I ask a lot of my older mentors, I'm like, y'all, what is your advice to me as being a young person living in America? What would be your advice to me to make some powerful, positive changes here? And I haven't really been given just a straight answer besides just lead with your heart, do what is right. Don't combat with people. People are going to meet you at the level of where they're at, and just continue to do good and leave a good, positive footprint on this planet. So I don't know, if y'all listening to me, if you guys got some advice for me, please, I'm open to hearing them. I want to do some stuff in my lifetime. I want to make some positive changes and impact, and I'm just so over the left fighting the right. And to be honest with you, I don't conform to any political party. Seriously, I'm more libertarian if I were to give y'all a definition, because I just wanted to come back to we the people. We have control over our own lives, bring culture, bring music, the freedom to do what we want when we want. And that's why I just have a huge passion about the infinite banking concept, because if you really put it down into nuts and bolts, it's freedom, it's liquidity, and it's control. Doing what I want, when I want, with my money, and nobody can stop me by telling me what I can and cannot do. You see what I'm saying? So to get back to our topic of what we're actually here talking about today, how does our policies build cash value? Well, here's a big statement that I hear all the time. I don't care about death benefit. I only want high immediate cash value. Maybe you've said it before. Maybe you've heard it before. Maybe you're watching some of these other YouTubers out there who are preaching 1090 policy designs. But cash value is the most misunderstood aspect of whole life insurance. Here's what I mean. Whole life insurance has always built up equity and cash value. In a traditional base premium, 100% base premium policy, it does build you up cash value. It just takes a little bit longer to build up the cash value, but it does build you up cash value. It has always built up cash value. See, the only thing that we're doing different over here is how we're internally designing that policy to still have the base premium. You got to have the base premium to even obtain the policy itself. But what we're doing is we're attaching on the paid up additions rider, paid up additions, PUA for short. And if you've been around for a long time, y'all know what the PUA rider is. But just to give like a quick analogy, how I like to describe it, I mean, compliance terms, like what the insurance company will call this is capitalized whole life insurance or overfunded whole life insurance. I call it IBC, but that's all it is, just capitalized whole life insurance. And what they mean by that is you are adding on that paid up additions rider. So think about it this way. Your policy, if you think of it like a rocket ship, you have the base of this rocket. The base is called your base premium, okay? The base of the rocket is your base premium. Then you got the two booster rockets that are attached onto the side, okay? Those are your paid up addition riders. The majority of your premium is going towards those paid up addition riders, anywhere from 60 to 90% is going towards those paid up additions. And why the majority of the premium is going there is because that's what gets the rocket ship out of the sky and out of the atmosphere. That's the purpose of the booster rockets, is to supercharge it out into space. And so the same thing is happening inside of your policy. Why and how we have cash value made available to us immediately in the policy, my definition of immediately is within 30 days, is because of those paid up addition riders and that paid up addition premium that we are paying inside of this policy. Hey, sorry to interrupt the episode here, but I want to take a quick break. If what you're hearing today has made you curious about infinite banking, how it works, I want you to go watch my free presentation. In it, I walk you through the same steps that my family took to pay off $984,000 of debt in 39 months, and how we've been able to recycle and recapture every single dollar since then. This isn't theory. This is real. I mean, this is what the wealthy have been using over 200 years to keep the money within the family. This is literally where banks, conventional banks, store a boatload of their dollars at. And it's the same process that we've helped thousands of families across the country put into action. So go to themoneymultiplier.com/presentation and see for yourself how you can start taking control of your money today. All right, let's get back into the episode. So here's the thing, to get a little bit technical for a lot of my analytical folks. The base premium. The base premium, sometimes you'll see it be reflected on your illustration as the verbiage of initial death benefit, okay? And why is because the base premium and that base death benefit, it's fixed in value. The premium is fixed and the death benefit is fixed. It cannot go up, it cannot go down. Where the paid up additions is a paid up. It's a paid for, right? So essentially it's almost like you're buying a 1 year whole life policy, okay? If that makes any sense. It's just a one-time thing, a paid up, a paid for 1-year whole life policy. So that PUA rider allows you, the policy owner, to add additional premium over and above the base premium to add more death benefit, and thus it adds more cash value. So this additions to the paid up additions refers to the increments of death benefit added. It's adding you additional death benefit. And y'all, we cannot have cash value unless we have this initial additional death benefit. And here, I'm going to flip my camera around and I'm going to give you a visual representation. Okay, and yes, you can see my my van here. But look, so here's my example, right? That's your base premium, and then the booster rockets, those are your paid up additions. So I actually took this screenshot directly from a policy illustration. Initial death benefit, 1.3 and some change, right? So this is fixed in value, cannot go up, it cannot go down. But to give you a visual representation of the PUA death benefit, you'll notice that it goes up each and every year because you're buying more of that additional additions increment of death benefit, and thus it's giving us the cash value. So to just put it into summary, base premium is ongoing, PUA premium is a one-off. Okay, you see the visual representation there? Okay, so now we kind of understand like the fundamentals, the foundation, if you will, of this. Here, let's get into economics 101. Capital equals equity. Capital is the value of an asset in the terms of money. Capital equals monetary value. A lot of us knows this by example of the capital or equity that's inside of our house. That's what we own of that house. If your house is worth $500,000 and you have $200,000 of equity inside of it, you own $200,000 or 40% of that house. The bank owns the other 60% if you're financing it through a traditional mortgage. In whole life, capital is called cash value. So you can think about the cash value is capital, which is also equity. Equity or cash value in the policy is the same thing as equity inside of your house. See, a lot of us know about this because it's just traditional mainstream conversation, right? And here's my hope. I really hope that whole life insurance can start to be a mainstream conversation. One of the gals up there at the home office of One America, she says, whole life is my love language. If I'm talking to you about whole life, it means I love you. But cash value is what the policy is worth today. Example, if I have a policy where my cash value is $100,000 and my death benefit is $500,000, the net present value of that policy is the cash value. So if I decide to go in there and reduce pay up my policy, RPU, just reduce pay it up and just stop making any future premiums inside of my policy, the policy is going to literally be worth what the cash value is. So if I go in there, in this example, I have $100,000 of cash value and I have a $500,000 death benefit, and I decide to RPU or reduce pay up the contract, well then my death benefit is going to go to the $100,000 of what I have in cash value, because cash value equals the net present value of the death benefit. So it's literally what the policy is worth in cash. The cash value grows because the policy becomes more valuable. This is a true guaranteed appreciating asset. So I say this again. PUA premium only generates cash value because it buys more in death benefit. So this whole quote of get as much cash value as you can with as little death benefit as possible is very contradictory, because the cash value only exists because the death benefit exists. You see what I'm saying? Another point I'm going to add to it. Your cash value is going to equal your death benefit at the age of 121. When you're 121, your cash value and your death benefit are going to equal. Anytime before that, your death benefit will always be higher than the cash that's inside of the policy. Until you get to age 121, that's when they equal out. So the question I ask you, my friends, do you want a big death benefit or do you want a small one? Get you to think. If I almost use the analogy of building a sandwich, would you want a sandwich that's all bread and no meat? All bread and no meat. No condiments, no tomatoes, no lettuce. Just all bread and no meat, no cheese on it. That'd be kind of a crappy little sandwich, would it not? When you're building out a policy that has a small base premium because you're influenced by these other people out there preaching about the infinite banking concept can only be used or only be valuable to you as a 1090 type of policy, 10% base, 90% paid up additions, or even worse yet, an IUL, Index Universal Life. Oh yeah, you can use IULs for banking. Yeah, you can, but should you? No, for many reasons. At some point, we should probably do another topic on that. Search this channel. Just search. If you're on line on youtube.com, you come to this channel, the Money Multiplier, you'll see a little search icon. Just search the words IUL, or I should say the letters IUL. IUL, and you can see all of my other resources on IUL versus whole life, so I'm not going to get into it today. But small base premium equals a short PUA premium paying ability. So you can't keep paying your paid up additions for as long as you want. And that kind of violates one of Nelson's law, which is capitalize, capitalize, don't be afraid to capitalize. Okay, I'm going to share the 5 laws of Nelson Nash here in a second. So a short PUA premium paying ability, you're forced to reduce or discontinue your premium, because if you continue to overfund into the paid up additions, you're going to hit the MEC limits, which is a perfect segue into point number 3, potential for MEC increases. MEC, modified endowment contract, aka when the policy becomes a taxable event. Remember, that's a whole cool thing about this, is that these are tax exempt. I'm trying to get the words tax free out of my vocabulary. Shout out Tom Love. Love you, my man. Yes, tax exempt. Number 4, there's the addition of term rider costs. Okay, so just to get into it briefly, I've talked about the MEC limit a lot, but when you're designing a policy like a 1090, 10% base, 90% paid up additions, you have to add on that term rider to manipulate the MEC limit. Because the MEC limit and the death benefit really play hand in hand together. And so in order to manipulate or increase that death benefit, you have to add on the term rider to push up the death benefit high enough so that you can funnel in all of that extra PUA premium so that it won't hit the tax consequences or those MEC limits. I'm going to show y'all another chart. The example of a $10,000 a year premium being built as a 1090 versus a 4060. 1090, 1,000 to the base, 9,000 to the paid up additions. 4060, 4,000 to the base, 6,000 to the paid up additions. Let me show you a chart representation here. I created this line graph to give y'all like a visual representation, if you will. My 4060 versus my 1090. The blue solid line is my 4060 death benefit. The blue dotted line is the 4060 cash value. Red solid line, 1090 death benefit. Red dotted line, 1090 cash value. You can see here, let's just focus on cash value first. On the cash value, you can see that the 1090 is going to beat the 4060. But look right here in year 10. In year 10, it actually equals out, where you have the same amount of cash value in both policies. But then as you continue on, look how much the blue dotted line grows compared to the red dotted line. I like to use the analogy of the tortoise and the hare story. Your hare is going to be your 1090. You're going to beat me in the beginning of the race. Some of these days I need to go back and maybe like reread the tortoise and the hare story. Like, I know the gist, I know the teaching component behind it, but I'm like, I need to go maybe like reread that story too. But the red dotted line, your 1090, is going to be your hare. The 4060, the blue dotted line, is going to be your tortoise. So 1090 is going to beat me in the early race. But there comes a point where my 4060, my tortoise, catches up and it wins the race all day long. Let me show you again. And it wins the race all day long. Let's even talk about the death benefit. Remember, blue is 4060, red is 1090. In my 1090, my death benefit is higher. Why is it higher? Because I have the term rider that's on the policy. I have to have on that term rider so that I can avoid the MEC limit. But then it falls off. You see how it drops and then it slowly starts to climb back up again? This right here is representing the term rider dropping off, and then it starts to build back up once I continue to pay base premium and I'm receiving dividends in this policy. But notice how in my 4060, my blue line, my death benefit, always continues to increase. It never ever drops. So it kind of just gets back to a Rick Warren quote. He has a quote in a book called The Purpose-Driven Life. Life is like a marathon. It doesn't matter how you start, it only matters how you finish. This is the game of life. And this is a marathon, y'all. I'm telling you right now, and I tell all of my clients this, if you think this is a get-rich-quick kind of deal, it's not. And if you are thinking that you're going to go buy yourself a whole life policy designed for the infinite banking concept and then stop the policy after 5 years, no, this isn't for you. Go do something else, because this is building your own personal banking system. This is a lifestyle. It's in addition to what you're already doing. It's your foundation to everything that you're doing within your financial life. So the perfect policy design, it's about the blend. Accumulate cash value in the necessary context of death benefit acquisition. Or what I like to say, my perfect sandwich. The perfect amount of mayo, the perfect amount of mustard, or Thousand Island, if that's what you like to add on yours. With the meat, the cheese, the tomato, the lettuce. I mean, it's the perfect blend to create this perfect sandwich. Now, given you don't got to do this all by yourself, right? I mean, that's why there's infinite banking practitioners like myself who are out there teaching this. We've gone through the trials. We've gone through the Nelson Nash Institute, got the proper training, had our mentors, had to jump through a lot of hoops, spend a lot of money to get ourselves up to this point, right? But this is why we're here. Don't try and go and do this all by yourself. I mean, can you go and do this all by yourself? Absolutely you can. Best of luck to you. But you're probably going to screw up. I'll tell you that right now. I ask people this all the time. People will come to me and they'll say, Hannah, I got one of these policies, but I just don't know how to use it. Can you help me? And a question I ask is I say, hey, you don't got to answer this for me, but just out of curiosity, and you can tell me no, you don't want to answer it, but why are you coming to me and asking me these questions, and why are you not going to the agent that actually sold you this policy? Oh, well, it's because my agent just doesn't know about this. Or, oh, maybe I sold this policy to myself because I got my life insurance license. I mean, seriously, go to the experts. Dad puts it best, actually. That's like amazing with all of his one-liners. He says, if you have a heart problem, are you going to go to your general practitioner? Are you just going to go to the regular general doctor for your heart issue? Or are you going to go to the cardiologist, the one that specializes in the heart? I prefer to go to the cardiologist. Would you? That's it. I'm just the cardiologist when it comes to the infinite banking concept, right? So we need to get our minds around that premium equals your solution. See, people want to look at their premium as it's a debt, it's a payment, it's an expense to me, it's something negative. But when you start to shift it in your mind that this premium is my deposit inside of an account that I own, I control, I have immediate access to cash value in there, and I can use it for whatever I want, whenever I want, is that premium more of a payment, or is it more treated like a deposit? I think it's a deposit. And what word do y'all like better, payment or deposit? So your premiums are your solutions, and you should feel excited when your premium notice comes due. I know I do. I can tell you my father actually gives us the visual representation. He runs out to his mailbox in his little undies, and he's doing a little dance around his mailbox saying, "Oh, premium notice due, yay!" So now you have to live in that visual example with me. But premium equals your solution. Premium duration should be as long as possible. Death benefit should be adequate for your family. The premium should be as much as you can wrap your mind around. It just goes back to the simple analogy of you go make your deposits in someone else's bank, and the bankers are using your money, making a good living off of it. So why don't you just treat your private bank with the same attitude and same respect? Premium deposits. Have you ever made too many deposits in your bank account? I hope the answer is no. So more premium equals more capital and less dependence on others. The problem is always going to be the problem, okay? We can't solve world peace here this week, all right? I'm working on it, but we can't do it this week. But the premiums are your solutions. You can only control what you can control, and if I can control the banking function within my life, I'm going to do so. So just to close it out with my last closing thoughts. And I'm thinking to myself, did I answer the questions of this topic today? How does infinite banking and whole life policies build cash value? I think I did. I think I did with getting into the base premium, the paid up additions, how and why we have cash value. I'm going to leave y'all with this. 5 simple rules for the infinite banking concept. And write these down, post it up on your desk. You can put it as a sticky note on your refrigerator. Just look at this every single day so you start to retrain your brain, rethink that thinking. That's one of the laws. Sorry, I got ahead of myself. But law number 1, think long range. Okay, you got to think long range. This is not for short-term thinking. This is generationally. That's why banks are so successful. They think generationally. Go back and watch one of my most recent episodes where I talk about the 50-year versus the 30-year mortgages versus the infinite banking concept. So number 1, think long range. Number 2, don't be afraid to capitalize. Capitalize, capitalize. Don't be afraid to capitalize. Have you ever made too many deposits into your checking account? Number 3, don't steal from your system. Treat your money with the same respect, just as if you were to borrow money from any other financial institution or private lender. Don't steal from your banking system. When you borrow from yourself, pay yourself back and charge yourself interest. Money's going to flow and grow to where it's respected to. That's one of my favorite one-liners. I should probably put that on a t-shirt now I'm thinking about it. Number 4, don't do business with banks. I put a little asterisk next to this one because in Nelson's mind, he's always thinking, hey, if you do business with banks, you're contributing to the problem. To me, as an investor, being in real estate, I'm okay to do business with banks, but I'm disciplined. I understand the bank's in control. I understand that I got to pay them back on time with interest. But if I can leverage some good debt, I'm going to leverage good debt. As Robert Kiyosaki says, I like debt because debt is tax-free money. A whole other topic we can get into. And then law number 5 is rethink your thinking. So continue to get into this stuff, rethink your thinking. I believe in y'all. I mean, seriously, I love talking about this stuff. I love getting into the analyticals, how it happens. Anyways. Thank you y'all for being here. Hopefully this is helpful for a lot of my people who kind of get hung up and don't understand all of the mechanics behind becoming your own banker and these whole life policies. But again, I stress to you, keep it stupid simple. In my mind, still to this day, when I was 8 years old and Dad was talking about this with us kids, all your policy is, it's just your glorified savings account. It's just your glorified savings account. You make your premiums into it. You have cash value. You can use it for whatever you want, whenever you want. And then anytime you put money back in, aka pay back your policy loans, your policy loans, when you pay them back, it just shows back up inside of your policy as cash available again. It's just my savings account. So keep it stupid simple is what I stress to y'all. And until next week, I think that's all my thoughts. If you have questions, please reach out to me. Send me an email, podcast@themoneymultiplier.com. You can also leave a comment on this channel. I look at the comments. I reply to the comments too, okay? So you can always ask me questions here on the channel. Don't forget to like the video. Subscribe, please. I like to meet a lot of y'all and see the community grow. And as always, if you have topics that you want me to get deeper into, or you have special guests you want me to bring onto the pod, just let me know. Reach out to me, okay? But until next week, as I always say, do well, be good, don't do anything I wouldn't do. And until then, mwah, much love, IBC community. Catch you next week. Hey y'all, if you've made it this far, this is where most people stop, and that's why they continue to be stuck with their money. Continue on with your education. Click right here. It'll take you to the next video.